Caroline Garrow-Wolf, and I'm an attorney at Connor and Winters. And I'm here with two gentlemen. I'll introduce themselves too.
My name's Russell Ramsell, also an attorney at Connor and Winters in our healthcare practice group. Do a lot of contract work and regulatory advice. So,
I'm Steve Wilson. I'm a CPA and a certified financial planner. I do a lot of work with the healthcare area, and we are really trying to help our clients through this rough time.
Yes. Well, today we're going to talk a lot about the provider relief funds that have been dispersed by HHS starting on April 10th. So we're about to hit the 30-day mark. And there's some really important terms and conditions and issues that providers need to be thinking about in relation to these funds. So far, the HHS has been focusing on the first 50 billion of the 100 billion, and I think we're going to see that next 50 in charge pretty soon. So I'm going to get the ball rolling. Russell, say I'm a provider and I received a direct deposit on April 10th. But I haven't received any other payments. Is there any way to get some more money from this provider relief fund?
potentially. The first payments that went out were based on your percentage of Medicare total spend in 2019. What they are doing now with the additional 20 billion that's available is trying to distribute that based on actual revenue received by the hospitals. And so what some of those funds have already been advance paid to certain hospitals. If you've received an additional set of funds in addition to what you got on April 10th, then you need to go on to HHS's website and enter in your revenue data. They have a portal that you can go on and enter in that information to verify that you received the correct amount of advance payment. If you did not receive an additional payment and you're a hospital, you can go on there and submit your cost report information. And ultimately, depending on what you look like compared to the other hospitals is what you're going to receive. In addition to that, there is now an uninsured program portal, same website, hhs.gov, just Google search HHS Coronavirus Relief Fund, and you will find this. But what this does, this portal allows you to tell the government how much care you have provided for uninsured patients, direct COVID-19 care and treatment, and you can submit a claim through that portal. And all of it's on the same website. Just take a look at the HHS website and click the buttons.
Perfect. So, Steve, I know a lot of our clients, your clients, are probably also looking at PPP loans. What are some of the differences, and what do people need to keep in mind when it comes to PPP loans versus this provider relief money?
Well, that's a very good question, and I think I can say that for the last month or so, there's been a lot of focus with our clients on the PPP loans just because of the difficulties either with their banks or with the SBA, and we've been in a situation where the rules seem to be changing on a fairly regular basis. But the PPP loan is a separate program. It is pretty much stands on its own. There are certain rules we have to follow on that, both in applying for the PPP loan and in hopefully ultimately being forgiven the PPP loan. The provider relief payments are not loans. So we don't have the issue of trying to justify forgiveness or payback, but we do need to look at all of the sources of relief that a business received, because if a provider receives both a PPP loan and also was given money by the HHS, we have to combine those amounts to determine what reporting requirements that they are going to be subject to, because the reporting requirements are based on the total you have received under the CARES Act. And in addition, we have to make sure that we don't inadvertently double dip. That is, if we're using it under the terms of the provider of the Paycheck Protection Program loan, we can't use those same dollars to justify utilization of the HHS payment. So we've got to keep everything separate, even though we have to combine them for purposes of determining what rules apply.
Thank you. That's really helpful. As to the relief funds, there's been a lot of talk about the terms and conditions, to which you have to attest within 30 days of receiving those funds. So for a lot of people, that 30-day mark is a few days away. So this is pretty relevant right now. Russell, can you tell us some about that and the important points from those terms and conditions?
Sure, and let's just talk about that attestation a second longer. Every provider, regardless of the amount you received, if you received anything at all in relief funds, you must attest to the terms and conditions. If you don't, then you are going to be deemed to have accepted the terms and conditions. So the only way you can't accept the terms and conditions is to respond within 30 days and give the money back. Otherwise, you're going to be accepting these. And like I said, the 150,000 is the threshold for the reporting requirement, but every provider must attest, regardless of whether or not you're going to have future reporting requirements. And the terms and conditions are lengthy, and you really need to take the time to read them. As far as the relief fund goes, the only thing you can use these funds for are healthcare related expenses or lost revenues that are attributable to COVID-19 and attributable to you preparing for, preventing, or treating COVID-19 actual or possible patients. And HHS has given us some guidance that they think everybody's a possible COVID-19 patient. So don't let that possible throw you too much. Because when you are looking at whether or not you are spending these funds correctly, you really should go through the questions of what did I do to prevent coronavirus, right? At least in the state of Oklahoma, the governor put in place a elective surgery prohibition over the month of April. That was to prepare for coronavirus. It was to free up PPE for acute care hospitals, and therefore those costs, your lost revenues for not having elective surgeries, there's a very strong argument that that was lost revenues attributable to coronavirus that you can use these provider relief funds to reimburse. In addition to that, you know, what did you do to care for patients? That's your more general, especially if you're in acute care hospital. This is the PPE you actually bought, right? Your ventilators to provide care. It could also reimburse funds for uninsured patients, for care you provided to uninsured patients. Then finally, what did you do to, what cost did you incur to prevent the spread of COVID-19? And this could be, you know, having extra people outside to take the temperatures of patients when they come in. You had an extra FTE just to do that, right? Or giving patients who don't have COVID-19 masks for the protection when they're in your facility. So those are the main things you need to look at when determining whether or not you can spend relief funds on on certain costs. A couple other key points is that HHS has said they are going to audit anybody who's received $2 million or more in under the CARES Act. And so they have a very fine focus on this and want to prevent fraud and abuse. So tracking your expenses and what you're using these funds for is going to be extremely important in the long run. A couple other things. You cannot use any of these provider relief funds if you're getting paid from another source, right? Steve kind of touched on this for a minute. If you're using PPP loan funds for an expense, you can't use relief fund for the same expense. You cannot double dip, but the same would be true of commercial insurance reimbursement, right? And then in addition to all of this, you have to agree that you are not going to charge any uninsured COVID-19 patient for their care or treatment more than you would if you were an in-network provider in their network. So you cannot balance bill if you're an out-of-network provider providing care to someone, a patient you're not in their network. And Steve, I think, can you talk a little bit about the terms and conditions that require you to follow the reasonable cost federal government grant principles, and what does that mean?
Well, that is something we've been spending a lot of time researching and trying to understand. The record keeping is almost, to me, it's almost like saying, what kind of record keeping do we need for tax purposes? We got to keep separate records for these funds that we've received, whether it be the PPP, HHS. The short answer is that we must maintain appropriate records and cost documentation that are required under the federal regulations. Now, that's the part I hate to hear, because federal regulations are very extensive and a lot more than we really want to cover. In fact, I was thinking when you read those terms and conditions that you're agreeing to, if I'm not mistaken, they reference some federal regulations. And if you're using their document with the hyperlinks, you can go to those federal regulations. And I doubt that anyone who has signed that document has read those regulations. Most of us aren't going to have time. And the fact that you're receiving Medicare funds requires that you maintain financial management systems sufficient for us to prepare, for you to prepare reports as required by the general and program specific terms and conditions. My fear is right now, to some degree, these are brand new programs. And we are saying right now that, yes, we're going to have the management systems in place, the accounting systems in place to file the reports, that we don't know what those reports look like. You're going to have to be able to trace the use of funds to such a level that an auditor can determine that the funds were used in compliance with the terms and conditions, and the funds, I like this part too, that the funds were also expended prudently. Now, every business generally has an accounting system in place, but now we need specific systems to track or to account for these specific dollars. Now, most of us accountants and others think in terms of the general theory that cash is fungible, cash is cash. But right now we've entered an era where no, cash is not just cash. This is a separate asset, and we're going to have to account for the use of this separate asset. So not only will we have to be able to see that the funds were expended for the intended purpose, but now we have to show that, as we talked about earlier, there's no double dipping. We haven't included costs in multiple places. And one of my biggest concerns is the federal regulations require that an entity have written policies and procedures to determine compliance with the applicable principles. And I would say at this point, very few people, if any, that I've talked to have written procedures in place to account for this. Their 30 days is almost up, so by default, they're agreeing to this unless, as Russell said, unless you sent the money back. So you're saying you're complying with this, and one of those rules, one of the first rules, is to have written procedures.
And Steve, that has been something that has certainly come up with some of our clients, and we have been putting together policies and procedures to try to, because the policies and procedures you need to have is governs your determination process as to whether or not this cost is reasonable. And you just have to have it in writing, and most of our clients have never dealt with federal grants before. And so call your lawyer, call your CPA. You need to get those in place.
Right, and we're actually trying to draft up some general guidelines, some general wording of those policies and procedures, but then each entity is probably going to have its own specific areas that need to be addressed, but we are working on an overall outline.
Well, and what concerns me about the level of detail and these new policies and procedures more than anything is HHS's and the OIG's statement that they are going to be looking really hard at your expenditures of these funds to prevent fraud and abuse. And when you get to reasonable cost principles, I mean, a lot of spending is somewhat subjective, right?
Absolutely.
And especially given the times, things might cost more than what they otherwise would. We've seen price gouging all over the place. And so I think the policies and procedures are the only thing that can really protect you when a government entity like the OIG comes and says, well, you shouldn't have paid $800. That was just, giving something to someone who doesn't deserve it. It was abuse of our funds. And there are large penalties that are involved if you make a false claim or commit fraud on the government. So those policies and procedures, having them in place now, as before you spend those funds, or at least as quickly as possible while you're spending, and having that in place provides protection for when the government regulators start come looking.
Yeah, and to clarify and double down on something you just said, we're not talking just about having to repay those funds back. We're talking about potential penalties on top of that initial amount. So the stakes are high. It might have been easy to get the funds, and a lot of time for a lot of our clients, the money just appeared. But it isn't that easy to make sure that you're going to be ready for an audit down the road. Well, I just want to say thank you to everyone listening in. It is impossible to give advice in the abstract, so we encourage you, when you have specific questions about these funds, to call your accountant, call your attorney. We've been studying these issues closely and trying to keep up to date as things are changing day to day. But we appreciate it, and I hope everyone's staying safe and healthy. Thank you.